Now, of course, crypto has also had its markets of volatility, certainly in the past week or two. And part of that is because China has announced yet another crackdown on digital currencies. But has anything really changed the environment? All right, for his thoughts, Ian Lowe from Dacxi joining us now. Ian, g'day. Good to talk to you again.
Good to see you.
Yeah, quite a lot playing out. We're seeing that certainly with all risk assets at the moment. So I'm interested to see, get your point of view then, what you think is at play. What's driving crypto markets at the moment?
Well, look, the big development this week that you referred to is the yet another crackdown coming out of China. So let's just try and put that in perspective. There's a little bit of collective eye rolling going on in the crypto ecosystem as it relates to this latest crackdown. And to put it in perspective, this is the 18th such announcement or crackdown since 2013, when it was first considered illegal or made illegal in China for institutions to trade Bitcoin. But look, the scale and scope of that crackdown continues to grow. So this latest crackdown essentially makes it almost impossible for anyone to operate in the crypto industry as a miner, as a platform, as an exchange, as well as making it, theoretically illegal for, or literally illegal for individual participants. And look, there is absolutely no surprise in the industry about this. I think if you think about one of the underlying concepts of digital assets, it's this idea of blockchain and decentralization. I don't think we could be surprised that China's not excited about the concept of decentralization. They're much more about oversight and control. So I think the scale and scope of it continues. Is it something brand new? Not really. It's more of the same. But some interesting points if we look at how this has played out historically, and particularly this year when they announced that crypto mining was being cracked, or there was a crackdown on crypto mining. China is absolutely committed to a successful broader release of the digital yuan. And so this is definitely a lens that they're looking through as it relates to other cryptocurrencies, which they probably see as broadly competitive. But more importantly, they just don't want any risk associated with the successful deployment of the digital yuan. We know that they're committed to that. There's already been a number of trials in place, and we expect that program will continue. But I'm sorry?
No, Ian, I was just going to say, is there greater clarity just as far as if you're in China and you hold Bitcoin, for instance, is that now illegal, or is it simply trading?
It's not specifically clear, but the implication is that it's going to become increasingly difficult to participate in the crypto ecosystem in any way, shape, or form. So we haven't quite got to the point where individuals are being marched out of their homes because they have a digital wallet that contains Bitcoin. Quite rightly, I think the regulators' view in China is, let's start at the institutional level. Let's start to target organisations who participate in the industry, and by virtue of that, we achieve a similar outcome at the individual level. But look, 47% prior to the crackdowns on mining earlier this year, 47% of data mining within the crypto ecosystem was coming out of China. What's interesting is that crackdown, we haven't seen that capacity disappear. What's happened is it's essentially resurfacing in other jurisdictions. The US is a good example. So Texas have said, you're very welcome to come to Texas. We'd be happy for you to be undertaking your business of mining Bitcoin here in Texas. The mayor of Miami, who's publicly advocated for Bitcoin, has said, listen, come to Miami. All of our electricity is generated through our nuclear program. So you'll actually be doing the environment a favour if you're using our local energy infrastructure. So some really interesting angles on all of that. But that mining capacity is just simply being repurposed in other jurisdictions. So I think the feeling of the industry is, sure, this is the next iteration of a growing scale and scope of crackdown in China. But in the end, the ownership base for crypto is just far too large. The utility around crypto is growing significantly. And so the market is resilient, and I think that'll be shown here in this case as well.
We did have some clarity too from the head of the Fed, Jay Powell, where he actually went on the record to say, look, he's not seeking to ban crypto, although I don't know that it was ever taken seriously that perhaps is what they were proposing. Nonetheless, the US also looking perhaps at introducing some sort of digital currency. How's that played out on markets?
Well, look, everyone is watching very closely with these large economies that have set, on the record saying we're looking at this. I think China are a bit further down the track than the US are on that. But the US is, they want to regulate the market. And look, we're seeing the acceleration of regulation around the world. More recently, in fact, very recently, in Switzerland, they announced the country's first regulated crypto fund. So this is Switzerland, okay? It's I think it's broadly considered to be a pretty conservative market and certainly highly regulated. So the ASIC equivalent in Switzerland has said we've approved a crypto fund called the Crypto Market Index Fund. It's for what they call qualified investors, which is really in our language professional investors, and pension funds, which in our language is superannuation funds. And it's an index called the Crypto Market Index 10, which just simply means that it's indexed against all the major cryptocurrencies. And to give you some idea, 70% of that index comprises Bitcoin, Ethereum, and XRP. So they're sticking with the safe territory within the less volatile elements of the market. Look, this is. Institutions must participate. There's too much growth and opportunity in crypto for them not to participate. And the risk that they run if they don't participate is that they'll be disintermediated, because there are so many ways now for individual investors to be a part of that opportunity without necessarily having to deal with the institutions that sit in the middle. So they really have to demonstrate that they have an offering in the space, and we're going to see a lot more of that over the coming months and years.
And Ian, you would have seen, of course, that news that a Canadian fund has now launched an ETF for crypto that is holding Ethereum and Bitcoin. You would imagine there's going to be a flood of these eventually, I guess, once it gets past those regulatory hurdles.
Yeah, that's right. So if we look at the Australian market, an ETF is a regulated instrument, financial instrument. Crypto is not considered a security per se. So crypto falls under AML, anti-money laundering regulations, but it's not yet regulated by ASIC. We know they're looking at it. We know that's going to change. That's going to be good for the industry. Things like ETFs, once we get that regulatory framework established, they will definitely surface, and I think they'll surface in a really significant way. We'll see quite a few of those.
Ian, great to get your thoughts. Thanks so much for joining us from Dacxi.
Good to talk to you.